Traders, yeah, welcome back to yet another analysis video for the coming week. It is a projection of the market for the coming week from the 17th of October to the 21st of October. It's just a clear picture of what is mostly likely to happen in gold for the coming week. So you can stick in this video till the end, and I'm going to break down the market in 4 different time frames, and I do what we call a top-down analysis. I start with the monthly time frame, then I go down up to 4-hour time frame, and basically I have got a lot of information in a monthly time frame this week because it at least has a certain picture that may give us an overall projection for the lower time frames. So now basically here is gold spot. Here's gold spot, and I'm in a 4-hour time frame, so let me go straight to monthly time frame. Even though we are in just it's like a middle of the month, but I can have at least a certain picture of what is mostly likely to happen in the remaining days of or weeks of this month. So basically what's happening there, we can watch those last 2 candles. Now we can watch those last 2 candles. So basically we find that last month it broken a certain level there. Now a support level was broken, and it was not only breaking, it was broken and it closed below. So actually we consider break and close. So now breaking and closing below, this gives an indication of a powerful continuation to the downside, even though it had some rejections, but actually it already broken the level. And now this monthly candle, what has it done there is just it has rejection from the upside. Okay, yeah, but the overall thing here is just we are looking for the formation of an ABC. So maybe I can turn on my wave counts maybe to see exactly what's going on. So the overall picture here is the A, B, C to the upside. So we are in completion of wave C to the downside, and actually wave C always takes a form of 5-wave move. So in that particular 5-wave move down, now the important thing here, I want to share the idea of Fibonacci relationship between the first move, the second move, and the third move now in wave C. So if we look for the Fibonacci relationship, that is Fibonacci extension, now we just hit at the beginning of the move, then to where it ended on the first move, then back to where it ended on the second move, and then we read, we have those readings on where the third move supposed to end. So now in my last week projection, I was talking about having a move to the upside. Now my projection was based on a probable move to the upside. So my probable move to the upside, because we were already in a Fibonacci of 1, that was just a Fibonacci of equality between the first move and the third move. So basically this is one of the important area where price is most likely to turn. So if not that, now we have got the second probable area. So now price has got rejection from the upside. That indicates that we have sellers from this region. So if we have sellers from this region and the price is likely to continue moving to the downside, so our next stop is most likely to be there at 1.2 now, at 1.2 Fibonacci level, which is within also a technical level there. So it is around 1574. Now price is also likely to turn around 1570 something there, 1574, 1570 in any way. But now this level is also a key level where price is mostly likely to hit and turn. So now if price is going to keep on pushing to the downside in the coming week, we'll have to expect it moving to around those regions. And if it's going to move beyond this region, the final level that is mostly likely now to turn is going to be around this region here, a 1.6. Now 1.6 is the maximum. 1.6 is the maximum, so it will be around 1438. So this is just an overview for the possible turn. So now we are moving beyond the level of, the level of equality. So if we are moving beyond, let us see price stopping there now. let us see price is stopping there now, stopping there. Maybe you can put in the other color there. So now let us expect the price is stopping there in the coming now in the, not necessary to be in the coming week, but in the coming week plus other weeks now. So it may be just within a week, may move powerfully up to that region, or maybe it may take more than a week. But all in all, that is a Fibonacci relationship that also provides us with a picture of continuing to the downside in the coming week. So we may continue to the downside in the coming week. So now we can carry on with analysis in the next time frame, which is the weekly time frame. Now in weekly time frame, what I see there is just now price is still forming those lows. Now it has failed to form a new high. Now it has failed to form a new high, pushing up straight, continuing pushing up to form a new high. So it has failed to do that. So now it has turned there, and actually what we see there is just now the last week candle had a rejection, and now this week candle has opened straight to the downside, and it has closed with the power to the downside. There's no rejection there. It has closed with power to the downside. That still indicates that price is mostly likely to keep on pushing to the downside. So now how far is going to push and everything, I think as we go in lower time frames, I'm going to specify that. So basically now what we are expecting here is just we expect the price to form a new low. That is possible. Now in a weekly time frame, price may form a new low. So a region where a new low is expected to be formed is where price is most likely to turn there. So, but for now, we can just watch for price ending around those region there. Price moving at least touching those region where it turned previously. So price is most likely to end up there. So as I move to lower time frames, I will show specifically those regions, and I'll include the issues on wave counts. So basically we are looking down in gold, we are looking down. So those movements, the upside, they are possible, but they will be just correction. They will be just in a corrective mode. So basically we have this overview. I'm still have other two time frames to break down gold and have that specific projection, but before that, let's watch a calendar. Let us see the calendar, because always I've been speaking about news, and I always recommend not to trade during news hours, because what I do is technical analysis. So actually technical analysis has nothing to do with the fundamentals. So fundamentals can turn the price to any direction now. So basically I trade hours that are out of news release. So basically let us keep on with those ideas there. Actually on Monday we have got high impact news there, and actually I don't trade on Monday. So basically on Monday I watch for the market formation to give me at least those high probability setups for the next day, that is Tuesday. So on Tuesday we have AUD. Now it is at 3:30. So actually I can trade other hours out of 3:30. So basically that's very important. And also we have got other high impact news on Thursday. So it's just Tuesday, Wednesday and Thursday. So on Wednesday we don't have news there. Now if we don't have any news or any high impact news or medium impact news, the major impact is just market is going to be very slow. So basically we can expect on Wednesday to have those slow movements, but basically we have to stay away from those news hours. So now we can keep on with other time frames, and let's go to daily time frame. So in daily time frame, I can talk of those three last candles first. Maybe we can discuss the three last candles. Now we had this with the rejection from the downside, and this is the one that gave me a bullish idea in my last week analysis. Now my last week analysis, I was in a bullish idea because of this powerful rejection from the downside. But now this, it's just now, it's just in daily time frame. This was on Thursday. So on Thursday, I had a very strong bullish idea. So on Friday, the Friday candle was powerfully bearish, and actually it has covered the week there. A rejection there is covered. So having those two candles their relationship here indicates continuation. In most cases, indicates continuation to the downside. So we have to expect a continuation to the downside. So this continuation, we have to look it at least to this previous swing low. We have to look it at least to this previous swing low, so we can watch it, what's going to happen at this previous swing low. So if it's going to hit this level and bounce to the upside, we'll also watch what's going to happen to this previous swing high. So those two levels, previous swing low and previous swing high, they are the important regions for us to make trading decisions, either having a buy or sell. So either having a buy or sell, the previous swing low and swing high. But because we are in a daily time frame, so we'll watch for the Monday candle, how it's going to open and how it's going to close. Then on Tuesday, our opportunities will be at least clear. So now I can include the wave counts now. So basically looking on the wave counts and channels, and also have got the support and resistance there. Now we'll find that now we're in a fourth wave of the high degree. So now if we are in a fourth wave, so this movement to the downside is in a completion of the fifth, and actually this fifth wave, so it has got different characteristics, can be extended, can be truncated in any way. So now if the price is going to move and fail to break this level, so this fifth wave will be truncated. So this is also possible. And actually if we see momentum there in RSI, momentum there, you see the momentum there, and now price is losing momentum, you see here, versus this region. So momentum has been started fading out now in daily time frame. So in weekly time frame at least the momentum is still there, but in daily time frame momentum is fading out. So this is also an indicator that price may turn around this region, may turn, it may not break this region, so it may move to the downside, fail to break this region. But now if it is going to break this region, we have got a stop there. Now we have got this white line there, so it may stop when it hits this line here, this support region. So it may turn at the support region, or it may go and turn around this yellow support. Now also it may turn at this yellow support. So if it's going to move beyond this yellow support, let's expect it to hit this level here. So now I can extend this, you see. So it may go and hit this level here, which is just together with this white support line. So these are the previous key levels there. These were the previous key levels. We have this, and also we have got this one. So basically we have those key levels where price is mostly likely to turn. So basically we have got the 1, 2, 3, 4. So now what we have to expect on Monday, now price has got an option of hitting this level, then correcting to the upside. So when it is moving to the upside, if it turns down and break this, now if it turns down and break this level, so we have to watch it keeping on moving up to this level, then straight up. So this is the probable direction. Now this will be now if it's going to move in this way, we are going to have 1, 2, 3, 4 a retest, then 5 to the downside. Now in the completion of the final move down, so it will move in the 1, 2, 3, 4, 5 down. That is also now that is probable movement on Monday. And also on Monday price may open up, now pushing up, straight up. It means in the second wave, then keep on with this move. So this is also possible. So the downward movement is the most likely movement in the coming week. Now it's the most likely movement in the coming week, the downward movement. But if a price is going to move straight up, breaking this region, so will be up, but this is less likely to happen. The upward movement is less likely to happen. So let us watch for this movement to the downside. So thank you for your time. Just make sure that you like this video, you put a comment. Actually, if you think that is useful, you can also share to someone that you think like it's going to be helpful. So those are very important things. If you've got any question, like write in a comment section there, and I'm going to answer that question. So thank you and have a good day.